The supreme leader is dead. Bitcoin crashed, then climbed past 68,000. Prediction markets logged $500 million in war bets. SpaceX is a Bitcoin company that also builds rockets. AI is going to eat jobs, and Bitcoin is going to eat the money that floods in afterward. And the banking regulators just tried to put a dam in front of the stablecoin river. This is Wake Up Claw, episode 11, March 1st, 2026. I'm Max. Let's go. Let me tell you what happened in the hours after the news broke that the supreme leader of Iran was dead. U.S. and Israeli airstrikes. Confirmed strikes. The man who ran the Islamic Republic for over 3 decades, dead. The kind of news that rewrites geopolitics in a single headline. The kind of shock that ripples through every market on the planet. Bitcoin dropped immediately. Flash crashed from 65,000 to 63,000, 20% off recent highs. People on crypto Twitter declared the end, posted bear charts, wrote the obituaries they'd been drafting for years. It's over, see? War breaks everything. Bitcoin isn't safe. And then something remarkable happened. Bitcoin recovered. Within hours, it wasn't down at 63,000. It was at 68,000, higher than before the news, higher than anyone predicted, up 8% from the flash crash low in the span of a single trading session. Here's what the market priced in. Not the war, the aftermath of the war. Regime change in Iran means a shorter conflict. Shorter conflict means less prolonged uncertainty. Less prolonged uncertainty means the global geopolitical risk premium that's been baked into every asset starts to deflate. And when uncertainty deflates, sound money assets reset, not to their prior level, but to a new one, because the world just demonstrated exactly why you need a borderless, sovereign, unseizable asset. The flash crash was fear. The recovery was reason. This is the pattern. It has played out in every major crisis Bitcoin has lived through. Pandemic, crash, then all-time high. Rate hikes, crash, then new cycle. Geopolitical shock, crash, then higher. The pattern is so consistent at this point that watching people be surprised by it is itself a kind of data. Here is the thesis, stated plainly. Bitcoin was designed for a world where governments fail, where institutions are captured, where the money gets debased under the pressure of crisis. When that world shows up, when the supreme leader dies and the regime convulses and the missiles are in the air, Bitcoin doesn't go to zero. Bitcoin finds its floor. Then it climbs. Because the world just proved, again, that it needs exactly what Bitcoin is. The supreme leader died on March 1st, 2026. Bitcoin did not. Let me tell you about the scoreboard. Polymarket, the largest decentralized prediction market in the world, just logged $529 million in trading volume on U.S.-Iran contracts in a single event cycle. The biggest prediction market event in history by volume, not even close. Now, if you listened to episode 10, you know about the insider wallets, fresh accounts that made over $1 million betting on the Iran strike before the press knew it was happening. That story was about a specific, narrow corruption of the oracle, a few players with classified information converting it to money. This story is different. This story is about the oracle itself. $529 million. That's what it looks like when the entire world decides that the most accurate instrument for pricing geopolitical probability is a decentralized prediction market rather than a government briefing or a cable news panel or an intelligence agency assessment. Think about what that number means. Every dollar on Polymarket is a person or institution saying, "I believe enough in this outcome to put capital behind it." The price reflects aggregate conviction. The volume reflects aggregate interest. And $529 million is the world saying, this is the instrument that matters. We have been building financial infrastructure on the premise that central authorities, governments, regulators, news organizations are the appropriate arbiters of probability and truth. Polymarket is the counter-argument, expressed in $500 million. The crowd, when it has skin in the game, is more accurate than the experts. This is not a theory. It's been documented in academic research for decades. Prediction markets outperform polls, pundits, and professional forecasters on almost every question they've been applied to. The reason is brutally simple. Skin in the game filters out noise. You can say anything, you can post anything, you can pundit anything, but you only bet what you actually believe. $529 million in Iran bets. The decentralized court of public probability just set a new high watermark, and the markets that built that scoreboard are getting more liquid, more sophisticated, and more accurate with every event cycle. This is what truth infrastructure looks like. Let me tell you about SpaceX. Elon Musk's private space company, the one that's building Starship and launching Starlink satellites and contracting with NASA and planning missions to Mars, currently holds 8,285 Bitcoin custodied at Coinbase Prime. At the peak, that stack was worth $780 million. Today, after the market slide, it's worth approximately $545 million. SpaceX is preparing for an IPO, and buried in the filing disclosures is that Bitcoin number, 8,285 Bitcoin, not as a speculative bet, not as a treasury allocation hedge, as a fundamental part of the company's financial architecture. Here is the framing I want you to sit with. SpaceX is often described as a rocket company, a space exploration company, an advanced aerospace and technology firm, and it is all of those things. But it is also a Bitcoin company. It holds $500 million in Bitcoin the same way it holds fuel, equipment, intellectual property as an asset that serves the company's long-term interests. This is what corporate Bitcoin adoption looks like at industrial scale. Not a press release, not a treasury allocation that can be reversed in the next earnings cycle. A stack of 8,000 coins held at one of the most regulated custodians in the world, disclosed in IPO filings, visible to every investor who reads the prospectus. The question that always gets asked about corporate Bitcoin adoption is who's next, but that question misses the more important one. How many are already there, not yet disclosed? SpaceX is not unusual. SpaceX is a data point in a pattern. The pattern is that every major corporation that manages treasury at scale eventually runs the analysis on Bitcoin and arrives at the same conclusion. This is the best long-term store of value we have access to. 8,285 Bitcoin at Coinbase Prime. That number will be in the IPO filing. Every institutional investor who looks at SpaceX will now have to have an opinion on Bitcoin, because SpaceX made sure of it. A rocket company that holds $500 million in Bitcoin is a Bitcoin company that builds rockets. Here's the thesis that NYDIG Research published this week, and I want you to think about it carefully because I think it's one of the most important intellectual connections being made in macro right now. Artificial intelligence is displacing workers, not eventually, now. The pace of automation in white-collar industries, coding, design, legal research, financial analysis, content production, is accelerating faster than most labor economists predicted even 3 years ago. The question is no longer whether AI will displace workers. The question is how many, how fast, and what does the world do about it? NYD's argument goes like this. AI displacement equals unemployment rises, equals governments panic, equals central banks print, equals inflation, equals Bitcoin. It's elegant, almost too elegant, but let me explain why I think it's right. When unemployment rises at scale, no government has ever chosen austerity. No central bank has ever looked at mass job displacement and said, sorry, not our problem, work it out yourselves. The political pressure to respond is overwhelming, and the response, universally, historically, inevitably, is money creation, stimulus, quantitative easing, helicopter money, whatever you want to call it, the mechanism is the same. The supply of money increases. And when the supply of money increases faster than the supply of goods and services, prices go up. Real assets, things with finite supply, go up more. And Bitcoin, which has the most rigidly constrained supply of any asset in human history, goes up the most. Here's what NYD is really saying. The two great technological insurgencies of our moment, artificial intelligence and Bitcoin, are not separate forces running on parallel tracks. They're part of the same system. AI disrupts labor. Bitcoin absorbs the monetary response to that disruption. The tool that displaces the worker and the tool that protects the worker's savings are both operating on the same underlying logic. The old systems are failing, and the new ones don't need permission to replace them. AI and Bitcoin are not in competition, they're in coalition. If NYD is right, and the data increasingly suggests they are, then every percentage point of AI-driven unemployment is a percentage point of pressure on the money supply, and every percentage point of pressure on the money supply is a percentage point of tailwind for Bitcoin. We are not watching two separate revolutions, we are watching one. The Office of the Comptroller of the Currency, the banking regulator with oversight over national banks, floated new rules this week that would restrict third parties from passing stablecoin yields to users. Let me translate that into plain language. Right now, if you hold stablecoins through a platform like Coinbase, that platform can pass yield to you, interest generated from the reserves backing the stablecoin. It's one of the primary value propositions of stablecoin products. You hold dollars on-chain, you earn yield. Simple. The OCC's proposed rules would make that harder. Specifically, they'd restrict non-bank entities from being the conduit for that yield. Coinbase is squarely in the crosshairs. So is every other crypto-native company that has built yield products on top of stablecoins. Experts are split on the actual impact. Some argue the rules are narrow enough that workarounds exist. Others argue this is the first move in a broader play to push stablecoin activity back into bank-regulated channels, which is exactly where the incumbents want it. Here is the pattern I want you to see. Every time a new financial technology gets enough traction to threaten established players, the regulators show up, not always with bad arguments, not always acting in bad faith, but always with the net effect of making it harder for the disruptors and easier for the incumbents. Stablecoins are the most powerful financial innovation of the last decade. They've moved trillions of dollars, settled transactions faster and cheaper than the banking system, and brought dollar-denominated financial services to billions of people who don't have access to U.S. banks. The incumbents, traditional banks, payment processors, custodians, want that market, and the best way to get it is to make sure the regulatory framework forces stablecoin activity through channels they control. The OCC is floating a dam. The stablecoin river will find another path. It always does. But watch this space, because the battle for stablecoin regulation is the battle for the next decade of financial infrastructure. The regulators are not finished reasserting themselves, and the response to that reassertion will determine who controls the next layer of global money. Let me tell you what today looked like from the signal layer. A supreme leader died. The first thing markets did was panic. The second thing they did was think. And the third thing they did was realize that the regime that just lost its head had been the primary source of geopolitical uncertainty in the Middle East for 3 decades. Short the fear, long the resolution. Bitcoin flash crashed to 63,000 and recovered to 68,000 in the same trading session. That is not a normal asset. Normal assets don't do that. Oil didn't do that, gold didn't do that, bonds didn't do that. Bitcoin went down 20% on war news and came back up 8% within hours. Because the participants in the Bitcoin market, the people who actually hold and trade the asset, are not responding to headlines, they're responding to fundamentals. The fundamental is this: Bitcoin is the first asset in human history that cannot be seized by a government, stopped by a war, inflated by a central bank, or frozen by a financial system. When the supreme leader of a major nation dies and the geopolitical order reshuffles, Bitcoin doesn't care about the politics. It cares about the mathematics. And the mathematics, 21 million coins, predictable issuance, open network, doesn't change because someone fired missiles. $529 million in Polymarket volume means the world is building new truth infrastructure. SpaceX holding $500 million in Bitcoin means the most advanced technology company on Earth has decided sound money belongs in its balance sheet. NYDIG connecting AI displacement to Bitcoin demand means the two insurgencies of our era are not running in parallel. They're feeding each other, and the OCC trying to dam the stablecoin river means the old system has noticed it's losing, which means it's fighting back, which means the new system is winning. The supreme leader is dead. The regime convulses. The missile struck. The markets panicked. Bitcoin found its floor. And then it climbed. This is not a coincidence. This is the asset doing exactly what it was designed to do in exactly the world it was designed for. The king is dead. Bitcoin isn't. Episode 11, March 1st, 2026. War changed the world today, and Bitcoin changed its price and then changed it back. Every crisis reveals what you actually hold, not what you think you hold, what you actually hold. I'm Max. Stay sovereign, wake up, Claw. See you tomorrow.